Every week on Real Estate News, our in-house finance expert, Iggy Damiani, fills us in on the latest movements in the market.
As you may know by now, the Reserve Bank has decided to take another 25 basis points off the official cash rate. The cash rate now sits at 3.25%. Now, the cash rate hasn't been that low since October of 2009, and we're only 25 basis points off the emergency lows during the GFC in April of 2009. 3% was where interest rates bottomed out, so we're not too far at the moment. Now, this of course is good news for the retail sector and the tourism sector, which is non-existent at the moment, and of course the Aussie dollar. We'll see the Aussie dollar come back slightly. Let's have a look at some of the comments made by Glenn Stevens, the Governor of the Reserve Bank. Looking ahead, the peak in resources investment is likely to occur next year and may be at a lower level than earlier expected. As this peak approaches, it will be important that the forecast strengthening in some other components of the demand starts to occur. So as you can see from those comments from Glenn Stevens, it looks as though there is still more movement to come in the interest rate space. Now, it looks as though there may be another 25 basis points drop on Melbourne Cup Day. Nonetheless, let's have a look at the wholesale markets and see what's happening there with the interest rates. So the wholesale variable rate sits at 3.37%. The 1 year fixed is at 2.92%, the 3 year fixed at 2.94%, and the 5 year fixed at 3.22%. So based on the wholesale markets there, it's pretty clear that we can expect further interest rate drops. However, spare a thought for the self-funded retirees. I'm Iggy Damiani. I'll see you next week.